Hi, this is Michael Rony Mullick, and you are watching the pre-market show. So today is the first of the July series. So it's first July, and also the July series is starting from today. So let us see how the markets are doing. Yesterday, we see that the US markets were not doing very well because again it was reacting to the GDP news, and it has entered into recession territory. And obviously, we had said that the US market reacts the following day after the event and not on the exact event day. So that is also factored in yesterday in the markets. And also, there was a news that US markets is now at a last 50 years, the first 6 months, the first half of the year, that means from January to June, that is the 6 months, the US markets have not performed so badly in the last 50 years in the first half of the year. So that was also a statistics published, and so overall the sentiments again are looking bearish in the global market, especially in the US. And so US markets had, after opening with a gap down yesterday, it tried to move up, but then again it did not sustain that, and it again fell towards the end. So let us look at the charts of the 5-minute chart of this is the S&P 500, and you can see that the markets opened with a huge gap down because of the European markets were hugely sold off. Then the markets tried to recover, and from there we saw there's another bout of selling towards the second half, bringing the markets down. S&P 500 was down 0.88 percentage. Similar story continued for Nasdaq as well. Nasdaq down by 1.33 percentage, and Dow Jones also down by 0.82 percentage. So bringing more bad news to the story is the US futures right now. US futures are on top of everything. They are again trading in the negative. So US futures, this is the Dow Jones is trading again another 0.7 percentage in the red, and also we are seeing Nasdaq falling to another 0.7 percentage, and the US futures are also down by, this S&P 500 futures are also down by 0.68 percentage. So we are seeing the US market ended in the red, and US futures are again in the red right now. So things do not look so pleasing in the global markets. And let us look at the Asian markets to see how they are trading. But Asian markets, all of them are deep in the red is what we see. So Hang Seng Index 0.62 percentage down. The Japanese index Nikkei is down 0.88 percentage. Chinese markets are down 0.98 percentage. And then the Korean markets, same story, 0.73 percentage down. Overall, so we are seeing all the markets have fallen significantly, especially the US markets look very weak, and then that bearishness is continuing on the Asian markets as well. So that can have a significant impact on our opening. We can expect a gap down opening, and in fact, SGX Nifty is also showing 15,682 as the opening level, which is almost close to a 100-point gap down if you consider yesterday's closing price. So that is definitely not a good thing to see. So that is the story right now. We can expect the markets to open gap down, and then if it can recover is another story. So we have been seeing strength in this week actually. So from Monday onwards, if you see the price action, so Monday the markets opened with a gap up, but the markets managed to stay above 15,800. Then the Tuesday story was something like a gap down, and the markets had fallen, but then it recovered swiftly, ending well above 15,800. Wednesday, same story. It ended above 15,800, but yesterday was the expiry day, and towards the second half there was a huge sell-off. So we are seeing that the bulls are slowly losing steam, and they're not being able to pick up the market that happened on yesterday. So let us see today if the markets open with a gap down, and if the bulls can take the markets higher like they were doing for the last few days. So that is going to be interesting to see. And if we look at the 1-day chart, we can see that a doji candle forming in Nifty. A doji candle means it's an indecision in the markets. So let me zoom in a bit, and so you'll be able to see. So this is yesterday's candle, 30th of June, and this is a doji candle, which means it has a tall wick and a tall tail, and the body of the candle is small. That means that the bulls or bears, neither of them were victorious in the battle. So let us see where the markets head towards. If we have a gap down opening towards 15,000, 670 and below, we can easily expect the markets to go down to 15,600, and that is broken. 15,550 to 500 will be the next support. And on the upside, if the market is able to move up, then definitely yesterday's high will be tested, and it will be acting as a resistance, because the markets took resistance there yesterday and also on 28th of June, that is on Tuesday. So that is going to be important for the markets. And then obviously Monday's high is there, and then ultimately 16,000. So expecting slightly bearish to sideways days for the market based on the global cues. So let us see what happens. This is the first of the month, and a lot of data is also going to be announced. We already have one of the data coming in, that is the Chinese manufacturing PMI, that is the Purchase Managers Index. And we know that the index, if it comes above 50, it is good. Expectation was at 50.5, it came at 51.7. So slightly better than expectation. It should be something positive for the markets. But the Chinese markets are not reacting very well to this, probably because of the US markets being down so much. And other things, we have the Indian manufacturing PMI for the month of June also being released today at 10:30 a.m. in the morning. So that is going to be there. And also, of course, we have the first of the month. That means the monthly auto sales data will be announced today. So definitely keep an eye out for the automobile related stocks, so that you can have a. So if they are we were seeing that the auto stocks was not doing so well yesterday it had fallen 1.26%. So let us see that how the auto sales reports are, and if they are negative, then we can expect a further sell-off in the market. So that is definitely going to be in there. Okay, and next, Bank Nifty, we are seeing slight positiveness in Bank Nifty, but let's see how the Bank Nifty opens. So finally, after 3 days of falling, it has finally shown some strength yesterday. So let's see whether how the Bank Nifty performs. And so if it opens with a gap down, then the markets can move toward 33,000. And on the upside, definitely yesterday's high, that is around 33,650, is going to be tested on the upside, is what I think. Coming to the IT index, we are seeing IT index underperforming yesterday, 1.05% down. So today, with Nasdaq falling, we can expect another round of selling in IT, and it can go down even further. So that is the expectation. So definitely IT stocks could be in focus today. They can perform negatively. Reliance, we have to see, because the crude oil prices, let us quickly see the crude oil prices right now. The crude is, where is it? Yeah, crude is trading at 105.7. So it is coming down. That is okay. That is good to see. Crude oil prices coming down to 105.72. So definitely Reliance can be there. There can be some weakness in Reliance, ONGC, and oil related stocks. But on the other hand, the paint industry, cement industry, oil marketing companies, they can be benefited from this. So keep an eye out for those as well. And definitely, I told you auto stocks. So keep an eye out for auto stocks as well. So overall, we have discussed the levels and some of the stocks that we can expect. Also, the negative opening that the market is expecting. So definitely on these days, if the market opens below a major level, there can be further sell-off in the markets. And if it sustains, so let us wait and see if there's a recovery towards the second half, and if the market is able to recover, if the bulls are still in control or not. But also on top of that, it's a weekend. So obviously in a weekend, we have to have the people creating closing off their positions, so that they're not carrying positions over the weekend, and so that kind of effect will also be there toward the second half. So definitely keep an eye out for all those, and hopefully this series will go well for everyone. And so with that, I'll be ending my video here, and thank you for watching.